Something has to give. The markets, taxes, spending, or the dollar, right? Here's what he knows that most people are missing. So look at this chart, okay? The US Treasury, this is the US Treasury, the bonds, the notes. So this big blue spike, that's trillions of US debt expiring in 2026, okay? But this is next year, and all of that has to be refinanced out at a much higher interest rate than it was originally issued at. Unless, again, they cut the rates like crazy next year before this expires and they refinance at a lower rate, which I think they will. In simple terms, the US loaded up on cheap debt. This was back in, whenever they lowered the rates in 2020 times when it was basically 0%. And then that cheap debt has to be rolled over at expensive rates. Interest expense is about to explode. Something has to give. The markets, taxes, spending, or the dollar, right? And the reality is they'll buy it themselves, roll it over, lower the rates, print the money to buy their own debt. It's basically money printing with a different name. And again, last time the Fed did this, Bitcoin went from 4,000 to 70,000 in the COVID era. And when liquidity flows back in, where does it go? It goes to stocks, real estate, and Bitcoin.